I'll be 45 years old this year, and everything that I've learned about finances, I learned through trial and error. Now, I'll be the first to admit that I haven't always made the best financial choices, but the decisions that I made earlier on in my life helped shape and determine who I actually am today. So, in today's video, I want to go over a few of the lessons that I've learned about money that helped me to shift my mindset to start actually getting to the next level. And the very first thing that I had to understand is that money is nothing more than a tool. Now, that really took me a really long time to understand that, because a lot of times, especially here in the United States and other westernized countries, we are constantly in the pursuit of chasing money. We talk about side hustles. We talk about working 2 and 3 jobs. We do whatever it takes to make the money because we want to be successful. And I think one of the things that gets lost in translation along the way is what is really the value of money, right? It used to be back in the day, up until about 5 or 10 years ago, money was just printed on paper. And if it said it was $20 or if it was $5 or $10, that really isn't the point. But the fact of the matter is it was just printed on a piece of paper that is almost worthless, right? It's only worth what someone else is willing to accept for the services or the products that you want to buy from them. So when I started to actually look at money as being a tool, as opposed to something that I needed to chase and something that I needed to hoard, something that I needed to hold on, my whole financial outlook started to change. Now, if you've watched any of my previous videos, then you've heard me talk about being in debt, specifically in credit card debt. You've heard me talk about getting in and out of cars every 12 to 18 months, which was part of the reason that it took me a little bit longer to actually start gaining some traction and starting to build wealth and getting that momentum. But one of the biggest factors that held me back the most from being able to actually gain wealth was saving too much money. We're in a time right now where there's a little bit of uncertainty, especially with the tariffs that are going on. There's the 90-day pause. We don't know what's going to happen after that 90 days. We've got a lot of companies out there laying off workers, and there's just a general anxiety about the true state of the economy right now. So when you hear me say saving too much money, that may cause some people to kind of scratch their head a little bit, because we've been taught that you should save as much money as possible. And I fell into that trap early on. I remember at times having $30,000 or $40,000 in a savings account that was essentially losing value every single day. I mean, if you take a look at inflation, especially over the past 3 to 5 years, and more specifically right around 2020, when COVID was around and the prices of everything were skyrocketing, our dollars in a bank account are getting minimal interest. Now, up until a couple years ago, it was very uncommon to see savings accounts with 4 or 5% interest. Now, over the past year or so, we've started to see those savings accounts start to scale down those rates that they're giving. And I think the best rate that I have for my account is around 3 or 4%. It's probably closer to 3%. But under normal times, in a normal economy, interest rates on savings accounts are typically under 1%. So you could imagine having a bunch of money sitting in a savings account. Inflation is at 3 or 4%. You're getting 0.5% of interest in your savings account. So the value of the money that you have sitting there in your rainy day fund is losing money every single day and every single year. Compound that over a 3 to 5 year period, and a $10,000, $20,000, $30,000, $40,000 that you had in an account is not worth what it was when you put it in there. And I really didn't understand that, right? So early on, when I was trying to figure out my way in this financial space, I really didn't understand and correlate between how inflation ate away at money that just sat in a savings account. See, we were always told to save money, and I think that we should. This is definitely not a message of me saying don't save money, because I think we all need to have access to cash that's relatively liquid. But really what I'm talking about is having substantial amounts of money sitting in a savings account. And since I started looking at money as a tool, which it absolutely is, I've got a few sets of criteria for how and why I save money. So the very first reason that I save money in an account is to have an emergency fund. I generally keep 2 to 3 months worth of expenses in a high yield savings account. And I just like to have that there so I could have quick access to cash if and when I need it. And that money sits there in case I get sick, in case I get laid off, in case I can't work, whatever. That money's there. I have quick access to liquid cash whenever I need it. And what I've found over the years is that I generally don't need much more than 2 to 3 months in a savings account, because I'm generally not going to have an emergency where I need access to thousands of dollars of cash. And the second reason that I would be saving money is if I had a short-term purchase that I was saving for, something like a vacation or something like that. But other than that, I'm not keeping any money in a savings account. In my opinion, there's no reason to. If you're bad with managing your money, or your income is not very consistent, then maybe you're going to want to keep a little bit more cash on hand to have access to. But for the majority of the people that are working standard W-2 jobs that understand how much they're going to get paid every 2 weeks or however often you get paid. But other than that, I would advise people to not keep a ton of money in a savings account, because that money could be invested. And it could be invested in several different areas. I know a lot of people have that entrepreneurial spirit. They want to start a business. So you could be investing that money in a business, right? That can help supplement your 9 to 5 until it makes enough money to where that could be your permanent job. You could also invest that money into real estate, whether that be into flipping houses, which I've done in the past, or buy and hold rentals, which I hope to do in the future. And lastly, you can invest that money in a brokerage account. And the brokerage account has the lowest barrier to entry. You just go online, you open up a brokerage account, and you can start investing in thousands of companies just like that. And depending on your investment strategy, whether that's a business, real estate, or the stock market, you're going to have opportunities to get a higher return as opposed to just leaving that money on the sidelines where it's being controlled by a financial institution. And guess what they're doing with your money? You take your money, you take it into a bank, and then somebody goes and they get a loan to buy a car. That bank is actually taking your money, lending it to someone else, charging them 6 or 7% interest to purchase that car. So everyone is investing. That's how you get ahead. You don't get ahead by putting your money in a savings account and hoping that over 10, 20, or 30 years that you're going to be able to save your way to wealth. You cannot save your way to wealth. And the sooner you understand that is when you start to have that mindset shift. Right? So like I had previously mentioned earlier in the video, I had that mindset. I was just going to save as much money as I could and save and save and save, because I just didn't know what to do with my money. But once I understood that money was that tool, that's all I wanted to do. So my mentality today is when money comes in, I want to get rid of it. I don't want to have money on me, because if I have money just sitting idly, it doesn't have an opportunity to do what it's supposed to do, right? So when you recognize that money is a tool, you understand that money sitting on the sidelines is money that could or should be invested to earn more money for you while you don't really have to do much. That's the game. That's the game. And that's one thing, especially in my community, right, that we're just not taught. We're not taught about how to multiply our money. We're taught how to work a normal job, not ask any questions, don't rock the boat, do your job, go home, and be happy that you get a paycheck. But you wait until you're 65, you get your Social Security, and then everything's gonna be all right. I don't know about you, but I'm not depending on Social Security to be my only source of income when I'm unable to work. So what do you guys think? Are you in a similar situation that I was, where I was just putting money in a savings account and really didn't have an idea of how much I should keep in that account or what to do with that money that I had in that account? Leave a comment down below and let me know, because I'm interested to see how much money are you keeping in a savings account, and are you missing opportunities to invest to grow your net worth? Thanks for watching, and I'll catch you in the next video.